Hello traders, it's Victor from TRADEPRO Academy and I hope everyone's doing well. In today's video, we're going to be talking about a cannot miss futures trading strategy, and it revolves around a very simple premise that really moves futures markets. When futures markets move, they usually run through these big jolts of energy that are usually called stop runs. A lot of the price movement rejoices in catching other traders with their pants down. Have you ever been in a position where you're looking at the market and you're seeing this thing just nosedive, right? It's dropping 10, 15, 20 points at a time, and you're thinking, well, I can't miss any more of this move. And by the time you click sell, you're getting in right at the bottom, only to see this thing reverse and just rip your stop and your face off, just completely skyrocket from a peak low, right? It also happens on the upside. You're seeing the market rip aggressive and you're like, well, I gotta buy this. Next thing you know, it reverses right when you buy and it hits a bunch of stops. And you don't get a small move just to take you out. You get a very strong reversal. This is what we call a stop run with stuck traders. Now, whether you're at a bottom or a top, there's going to be stuck traders that are a part of a stop run, and those stop runs really make those aggressive moves. So this strategy is based on exactly that, finding where those stuck traders are on a futures order flow tool called the depth of market, and finding the ability to catch that really big bounce and reversal based on stuck traders and based on stop hunts. So if you want to be a part of the stop hunt rather than getting stopped, but being on the actual good side of it, this strategy is for you. But before we jump right into that, I want you guys to smash that like button, hit that subscribe button, and drop a comment down below. Hello traders, we've finally made it to the computer here, and we are going to explain this strategy using Sierra charts, right? We have a very simple 10-tick chart here on our screen. We also have a DOM. And this is, I would say, one of the must-have trading strategies if you're trading futures, right? Especially when we're taking a look at the S&P 500, the most liquid equity futures market that we have. So this is a very key strategy that everyone should know, how to identify stuck traders and a reversal. So there are a lot of things that we are going to talk about and discuss today, right? Let's list them out before we get right into them. Number one, we're going to be going through what is a stop run, right? We're going to explain the basics. Number two, what are stuck traders? Number three, we're going to do a small breakdown on the DOM. You guys have already seen those DOM videos, so if you haven't, go check those out, where we do a thorough explanation on the DOM that we have. And then we're going to be going through number four, what do stuck traders actually look like on the DOM? Number five, how can we find the reversal of those stuck traders on the DOM? Number six, finally, right, the bread and butter, how can we actually take advantage of this? And then we're going to be breaking down some things that you need to know in order for the strategy to be effective, right? Followed by naturally an example, because we had an amazing opportunity to find stuck traders in today's session. In mid-September, right, while we had this strong downward press, there was an opportunity in and around this area where the stuck shorts accumulated, and we had ourselves a nice little pop. So let's go over these basics step by step to begin with, right? When we talk about stop runs and we talk about stuck traders, we have to understand what a stop run is naturally. A stop run in the market is market reaction, right? A market movement that actually anticipates where a vast majority of the stops for traders have been hidden, the stops have been placed, and it goes and takes those stops. So imagine you're in a downward trend, right? And everyone's selling happily, right? They have their stops. Pretend that these green lines are the stops, right? You have a lot of stops accumulated like this. And all of a sudden, right, these sellers, right, they were strong up here, but they start to dissipate in and around the lows, right? They start to dissipate and there's only a few left, and they all bunch up together at one area and try to sell for another press lower. They haven't had enough from this massive sell stop, and they're looking for more and more. Now, what we have to understand is that there are buy stops from all of these massive shorts that came in, right? There's buy stops everywhere from shorts that came in. Now, a stop run is trying to identify where those stops may be and trigger those stops to get an eventual up move, because these stops become big market buy orders, right? If you're looking for a downward trend, right? Buy stops on a sell position and sell stops on a buy position, these become big market orders to actually buy the market, which then turns into what we see an aggressive buy stop market rally, right? Now, if we understand stop runs, we can also understand what stuck traders are. Now, stuck traders happen at the tops and bottoms of the market, right? You can have stuck longs at the tops, right? Potentially there might be some stuck longs up here, and you can have stuck shorts at the lows. So stuck traders in the market, what happens in general is that these traders at a market high or low, right? At a market high, you get longs that continuously buy the top, buy the top, buy the top, right? These are usually not the most senior traders, right? They could be some rookies, they could be some newer traders that think that this trend is going to persist, right? And what happens is there's only a finite group of traders that continuously buy these tops or bottoms, right? It's not like a continuous flow that we've seen on the overall trend, right? For example, down here, there could be a finite number of sellers trying to sell the lows, right? Now, throughout this whole period, there had been massive sellers that keep reloading the short, and eventually there's just these sellers that continuously sell towards a low but don't get anywhere, right? You see massive orders flowing through, right? Maybe not huge, but massive for one level, continuously flowing through, but they cannot press price any lower. Now, what happens is big buyers, right? Intelligent buyers, intelligent traders notice that, hey, these guys are selling these lows. They can't get anywhere. And they take advantage of this, propping the market for that buy stop run, in which that they start buying a little more aggressively. They start adding size, and eventually big size, big whales come in, and they find that buy stop run for the stuck shorts or a sell stop run for those stuck longs. So now that we understand those two main events, right, what are stop runs and what are stuck traders, we can look at the DOM as well, right? Understanding what a breakdown of the DOM is, right? So if you don't know what all these columns are on the DOM, please go check out the other video instead of us spending another 20 minutes each video that we look at a DOM trying to explain this. We're going to be focused on the middle column where we have market buyers, right? We have market buyers. And sellers, I should say. So the sell column here and the market buy column here. And then over here, we have the bid and ask volume, which takes a general volume profile and splits it up between bid and ask, right? These are going to be the two main, right, areas of interest. And another area of interest that's very secondary, it's not our biggest point of interest, is going to be here and here on the bid and ask column, right? To a very small degree. Now, what do stuck traders look like in this market, right? On a typical DOM, assuming that we're talking about this downward rally, because this is the example that I'm going to show you on a recording just after we talk about this, but assuming that we have this downward rally, right? When you're looking at a DOM, a bearish DOM, what happens is on the sell side here, right, where these red numbers are, on the sell side of this DOM, on this market sell, you're going to see continuous larger orders hitting the book and continuously pressing prices lower, right? You're going to see 200, right, 300, 150 reload the offer side, and this is called reoffering, right? When they reoffer, you expect a large number like this, 236, to actually push prices lower. When you get a reoffer, right, on the downside, you are under the assumption that price will downtick off of a reoffer like this, right? When you continuously reoffer, prices downtick, right? Maybe at some point you can get a little pull up, but it's not going to be on a heavy reoffer. Typically, when you see 260, for example, come in the book, right, and hit this thing to the sell side, the expectation is to see a few ticks, maybe 2, 3, maybe 4 ticks to the downside movement off of big sell order like that. If you see a large sell order that actually results in an uptick or just a flat line of a position, mainly an uptick, you are going to see a potential turnaround. That's not going to be a strong reoffer, right? It's the same thing if you flip it to the upside. So what do these stuck traders look like? Now that we've mentioned that you have to see continuous reoffer in this downtrend, right? At a certain point, what happens is that you reoffer, and you reoffer to a certain point where you cannot press price lower, and the reoffer is very, very heavy. Now, if you lose track of how many contracts traded, this is going to be our friend here, right? Because this accumulates how many contracts trade on the bid and ask on each side. So you get constant reoffer, right? And at a certain point, you'll notice, right? This is the area 32, right? Obviously, it's changed because we've traded through it a few times. You'll see in the recording how it doesn't change. But the 32, right? You accumulate, for example, a lot of sell side here on the bid volume, right? A lot of sell side accumulates. and they continuously trade. This number gets larger and larger into the 500s. And this number over here starts gaining strength. Maybe it starts at 300. Next thing you know, it's at 400. Next thing you know, it's at 700, 900, right? 1500 at a certain point. And what is happening is these guys are selling on the market sell side. These guys are accumulating to 1500 on this block, on the bid block here. But, right, remember, from the principle that we have to go down on reoffers, this reoffer stays stagnant. Maybe blips down for a millisecond, then gets bought up. It's a lot about the reaction speed and time, right? It gets bought up, right? It stays stagnant, gets bought up, stays stagnant, gets bought up. So if 1500 goes sell side here, right, and it gets bought up by 300, this is an area where you're starting to see a very, very pronounced stuck short. Now, if we bring in this bid column, as you'll see in the example, there's large orders on the market depth on the bid column. These guys fill the 300 or whatever fill, right? They go market sell. Price does not budge to the downside. This is the absorption or the accumulation of a stuck short. Then you'll notice when we pop up a little, 600 get placed at that area to market sell, right? I kind of want to see them fill so we can add to the 1500 that got stuck short already, making it 2100 and really rip this thing right off of that first bounce. That is what creates the stuck short. When you get a reoffer and a massive one at that, they keep adding size, but it can't go any lower. And price is accumulate massive sellers without budging any lower. Now, to add to that, it's not just enough to see a massive stuck short. That is only one portion of this strategy. It's only one portion of this reversal. The second portion of the strategy in the reversal is to see a reactive buy, because the market cannot go up without really strong buyers, as the market cannot go down without really strong sellers. So when you see a reactive buy, you need to wait for these stuck shorts, right, to accumulate, and then you're going to be looking for pops on heavy volume on the ask volume side, right? On the rebid of the market, right? When they accumulate, you want to see larger orders like 150 plus, ideally 300-400 go buy side, and they pop it up, right? A few ticks, 1, 3, ideally somewhere between 3 and 5 ticks, they pop it up, right? When you get that kind of reaction after you see a massive short come into the market and they bid it up on smaller volume than the short came in, that combination right there creates a stuck short and a reactive buy, which propagates the move for a buy stop run, for a stop run, right? Once you find those stuck traders, you will need to see that rebid after these guys get stuck, right? Just like if you have a stuck long, you have to see a massive reoffer that pushes prices lower to get that ball rolling. So the question becomes, how do we take advantage of this move? How do we take advantage of something like this? Ideally, we don't just see the stuck trader accumulate and we just stick our necks out, because we don't know if these guys pop it down, right? They could accumulate, all of a sudden they drop another 5 points, then you're stuck taking a loss, right? When you see a stuck short accumulate, like you'll see in the example, it's best to wait to see, okay, can they rebid? What kind of rebid is it? And then get in with those rebids that happen. It might be 1, 2, 3 ticks above that stuck short, but as long as your stop is protected, right? You have a 2 to 4 point stop, right? Somewhere, I like to use a 3-point stop on the ES futures, but you have like a 3-point stop, for example, you can protect yourself as long as you're trying to get in and around those stuck shorts, right? Those stuck shorts, especially where the rebid is, because you want to be buying with the buyers, right? That's one of the main ways to take advantage of this move. So you'll see in the example that we pick up the move from this little pop right here. It comes back down. At that point, we weren't really necessarily looking too much at the market, but they accumulate again down at this area for the actual extended move, which we were looking for. So keep that in mind as you are looking for these specific trades. Now, some things that you need to consider. Sometimes the stuck traders can get unstuck, like I mentioned. You would really need to see a rebid in this scenario to really get convinced, because you get a stuck trader, they hold. There's no rebid, right? Maybe there's smaller numbers, more insignificant numbers, and then you actually drop it, right? You have to make sure that these numbers are very large and they happen with speed. They happen with reaction. So keep that in mind, depending on what side you're on, right? It could be a reoffer as well. Another thing is, if it's on a smaller bid, like you'll see on this example, maybe try smaller size. You don't have to put a full size position on, because that might not be the large reversal that you're looking for. So with that being said, why don't we dive right into this example, and then we'll meet you for the outro. Thank you so much, and let's see what this looks like. All right, so this is a recording example that I've done with one of our members here to kind of reiterate what is going on in terms of what we had talked about, right? A stuck position in the market, a stuck short, stuck long, whatever the case may be. In this example, it is a stuck short. And what I want to draw to your attention here is going to be the beginning of this, right? The beginning of these stuck shorts, which is going to open up right in and around the area you guys can see where we have a larger position that has 778. By the sell side, you have 776 on the buy side naturally. And what we're going to be doing with this is noting that there are a lot of traders getting in this area. Now, when you have stuck shorts, realistically, what happens is you start to see at the lows, larger short numbers in the middle columns here on the sell side actually accumulate, and they can't go down. So it doesn't mean that this is necessarily stuck short, but what's going on is the positioning for the stuck short is opening up. So what we have right here is 305 at the lows. You got 219, 240, right? They're starting to accumulate those stuck positions with weaker buyers. So if we let this thing play out a little here, right, before taking a look at it a little further, you can see, yes, you get a big jolt from that 24 region, 26, right? Remember, we're trying to pinpoint around a 2-point area. So for example, right here, I'm just noting that we have those accumulated stuck traders. If you picked up the 25s or so, you're not taking much heat and you're getting a pretty decent bounce. But this isn't necessarily the stuck short that's really eye-opening, right? We want to see a very, very clear defined area where we do have a stuck short, again, with a reactive buy. Now, the stuck short will accumulate, and you'll see that there is very, very little doubt that this guy cannot push lower. So what we're going to be looking for is market sell in these middle red columns with the accumulation of that stuck short here on the bid and ask profile. So what we're seeing right now, right, you're looking at the middle columns, it's kind of just bouncing around. You're starting to see some shorts accumulate a little more, right? You're getting a little reactive push against the short side, right? You can see 300 sell side, 300 buy side, almost 300 buy side. They kind of flick a little higher, right? But we'll see these guys accumulate very, very shortly here. You can see they add, you can see now it's 804. And what we're seeing is the continuation of the push lower with some more sell side. So now you're seeing a little more, right? There's a little reactive buy. 343s, you have 600 buy side that kind of down ticket. So it's not necessarily a clear defined buyer, right? And now you're seeing, right, larger shorts accumulating at these lows, right? You got 200s, 300s, right? Massive 600, 700, 800 at the lows here. Massive shorts accumulating, huge short. 441 slaps the book right away. You have 650 here short side. Not too many buyers, but they can't really push any lower, right? They're still accumulating. It's not the time yet. And now you're starting to see, okay, 500 at the lows, 600, 700 at the lows, right? 800 at the lows, 900 at the lows, 1,000 at the lows, and they can't push lower. All traded here with 625 going reactive bid, right? With massive 1,000 short, literally at the low. You can't go lower. You pop on 600 buy side, more buy side accumulated here. This is what the stuck short looks like, right? You get a reactive buy on that area. You got a massive stuck short, and that's the pop. From here, you have a very low risk entry. You can go anywhere between these 23 halves up to 24, 25 halves, right? With the stop below these guys, below the stuck short area, in anticipation that you see continuous buy side, 286, 400, right? 1,200 nearly buy side accumulate 26 quarter, right? Massive buyers, just a lot of general volume traded at that area. You can look to buy some of these lows, and you're going to see they're going to start to accelerate to the buy side off of this low area. Massive stuck short. You're going to get that squeeze. You're already up 3-4 handles, something like that. And there is more potential, right? As long as these buyers continue to accumulate. So let's just see what happens. Next 30 seconds here. You can see they're kind of just bouncing around, right? This could be an area to look to get into that actual trade, right? You fast forward another 30 seconds. What's going on down here again, right? The accumulation of more shorts. They're adding to the shorts, adding to the shorts, adding to the shorts. Now above them, you have 887, 970 go buy side. Massive shorts accumulated at that area, right? They pop down a little. You get that fill at that 23, 24 area, huge stuck shorts. Yeah, it can happen. It can downtick like that a bit. But you'll see, right? You downtick, you rebid aggressively, massive shorts at this area, 427s, massive buy side, 1,000. You're getting that pop, aggressive reactions, all about the reactivity of the buyers that come in from that stuck short area, right? This is where you're expecting to see that next pop to the upside. So if we fast forward a bit here, right, you're seeing right now from that 23, 24 region, you're trading 27s. Okay, great. Right, it's a little slower. Now you're trading 30s, 7-point move from the stuck shorts. Massive buyers, right, accumulated the whole way up. Realistically, 30 is probably your first target. You can see a lot of market orders traded at that area. And here we are, right? We can rewind a little. You can see we go from the 31 region. You can see continuous buy side. 203s buy right at the tops. They uptick. 206 upticks. And then now you come into this area, right? You had a very, very powerful move. You accumulated up to the 36. Very, very strong buy side from that accumulated stuck short position. So this is what I wanted to show you in terms of the example, right? What it looks like, what a defined stuck short looks like for that extended move back to the upside. So when you see areas like these, stuck shorts, stuck longs, right? They're reciprocal in that sense, right? You're just looking for the opposite end of the structure to shape up with those market traders. And then you're going to find that massive inflection or reversal position. So go ahead, take a look at a DOM, try that out, and we'll see you for the outro. This is a huge, huge strategy. And of course, it doesn't come by all the time. But when you see it, you'll really know exactly what you're looking for. And now you can take advantage of it. So if you've learned a lot throughout this, I want you guys to smash that like button and hit that subscribe button and ring that little bell to notify you when we drop gems like these. And we have more videos about futures trading and the depth of market coming up. So I hope to see you guys there. Thanks for watching.